Welcome back to Wise Senior Canada. Today, we are talking about one of the most overlooked and costly mistakes in Canadian retirement planning: not updating your beneficiary designations. This is a simple form you fill out at your bank or financial institution, but getting it wrong can cost your family tens of thousands of dollars. Let's get into it. Most Canadians know they need a will. But here is something many people do not realize when it comes to registered accounts like your TFSA and RRSP. The beneficiary designation form at your financial institution overrides your will entirely. That means it does not matter what your will says. Whoever is named on that form gets the money. If those two documents do not match, your family could end up in a very difficult and expensive situation. Let's start with the TFSA. A tax-free savings account is one of the most powerful tools in your financial plan, and what you do with it after death matters enormously. If you name a beneficiary on your TFSA, the funds pass directly to that person after your death, completely bypassing your estate and avoiding probate fees. The amount up to the fair market value of your TFSA on the date of death is transferred tax-free. But here is where most people make a critical mistake with their TFSA. If your spouse is simply named as a beneficiary, they receive the funds tax-free, but the account closes. Your spouse would have to use their own TFSA contribution room to shelter the money. If they have already used their room, the funds sit outside a TFSA and are now exposed to tax. The much better option is to name your spouse as a successor holder. As a successor holder, your spouse takes over the account entirely, keeping its tax-free status without affecting their own contribution room at all. This is a simple change you can make at your bank today. Now let's talk about RRSP and RRIF. The rules here are even more important to get right. If you name your spouse or common law partner as the beneficiary of your RRSP or RRIF, the funds can roll over to their RRSP or RRIF completely tax-free. No income tax is triggered at death. This is one of the most powerful tax deferrals available to Canadian couples, and it is entirely dependent on having the right beneficiary named on the account. Here is where it gets serious. If you name a non-spouse as the beneficiary of your RRSP or RRIF, such as a child or grandchild, the entire value of the account on the date of death is included as income on your final tax return. If you have $200,000 in your RRSP and you name your adult child as the beneficiary, that $200,000 gets added to your income in the year of death and taxed accordingly. The tax bill could easily be $80,000 or more. Your child receives the full $200,000, but your estate is responsible for paying that tax bill. If your estate does not have enough cash to cover it, CRA can pursue your beneficiary directly. What happens if you have no beneficiary named at all? The funds fall into your estate. That means they go through probate, which can take months or even years, and probate fees apply. In Ontario, for example, the estate administration tax is 1.5% of the estate value above $50,000. On a $300,000 estate, that is over $3,750 in fees alone, plus legal costs. Naming a beneficiary directly avoids all of this entirely. There are a few other mistakes that come up regularly. First, naming a minor child directly as a beneficiary. If a child under 18 receives more than $10,000 directly, a court-appointed guardian of property is required to manage the funds until they turn 18. This is a lengthy and expensive legal process that most families do not expect. Second, never updating your designations after major life events. Divorce, remarriage, the death of a named beneficiary, or the birth of a grandchild are all reasons to review your forms immediately. If your ex-spouse is still named on your RRSP, they may still receive it, regardless of what your will says. For seniors in Quebec, the rules are different. Quebec does not recognize direct beneficiary designations for deposit TFSAs or trust arrangements. Instead, the designation must be included in your will. This means TFSA funds in Quebec typically pass through the estate and may be subject to probate. If you live in Quebec, it is especially important to work with a notary to ensure your estate plan reflects these rules. Here is what you should do right now. Contact each financial institution where you hold a TFSA, RRSP, or RRIF and ask to review your current beneficiary designations. Ask specifically whether your spouse is named as a successor holder on your TFSA, not just a beneficiary. Make sure your designations reflect your current life situation. And make sure your will and your account designations are aligned and consistent with each other. Quick summary. Your beneficiary designation overrides your will, so it must be correct and up to date. For your TFSA, name your spouse as successor holder, not just beneficiary. For your RRSP and RRIF, a spousal beneficiary allows a tax-free rollover. A non-spouse beneficiary triggers a large tax bill for your estate. No beneficiary means probate, delays, and fees. And review your designations after every major life event. For tax questions, contact the CRA at 1-800-959-8281. For questions about your accounts, contact your financial institution directly. See you in the next video.